David Chan, Portfolio Manager at MLC Private Equity. First of all, David, thank you for participating in the Inside Network's Alternatives Symposium.
No, thank you, James. It was a pleasure to be there.
David, we've seen rates reset both quickly and in relative terms aggressively. So how is that influencing the businesses you look at?
Yeah, I think in terms of capital structure for new deals we're looking at, we're tending to be more conservative at the outset in terms of leverage. There's two of the deals that we've recently completed in the last 6 months had no leverage at entry, which would have been a very unusual capital structure a few years ago. But that said, given how high interest rates are in this environment, we're looking to back businesses which have more organic growth and more operational improvement opportunities, and potentially in a few years' time, when the rate environment comes off a little bit and the businesses are more mature, to introduce some leverage at that point in time. But we're being very conservative about our capital structures day one.
Should investors be cautious about allocating capital to leveraged assets in an uncertain interest rate regime, or does that somewhat misinterpret the levels of debt we see across private markets?
Yeah, I think on average, leverage only really accounts for around a quarter to a maximum a third of the value creation in any particular private equity deal. And so if you're backing good companies, it shouldn't matter what the interest rate environment really is. If you're holding these assets 5 to 7 years, you will create value over that time period. And so we often say with our team, kind of time in the market is much more important than trying to time the market. And that's true both from a valuation and a leverage perspective.
Do investors need to see a healthy IPO market to realise the returns from private allocations?
Yeah, IPOs are really a very small part of the exit opportunity set for private assets. It tends to be anywhere between kind of around 10 to 20% of the exit environment. But in today's environment where the IPO market is largely shut, it's less than 1% of exits. Most exits are going to strategic or financial buyers. And so IPO really isn't a necessary condition to be able to generate healthy private equity returns.
Where do you and your team see the greatest opportunities across sectors and geographies in the current environment?
Yeah, I think in the current environment, there's a flight towards higher quality assets and lower risk assets. So we've been deploying more capital into developed economies, including within Asia. Within Asia, one of the kind of bright sparks in terms of emerging economies, though, is India, where we see a great demographic dividend and some interesting plays in the IT services space, particularly cross-border with the US. And in terms of sectors, we tend to back non-cyclical sectors that are growing through the cycle, particularly in enterprise SaaS businesses in the tech space and in the healthcare space. And we continue to see very attractive opportunities in both those sectors.
What do you see as the biggest potential surprise for investors that 2024 could bring?
Yeah, I think in terms of one of the big themes that we've seen across the market in 2023 was really ChatGPT and OpenAI, and the introduction of AI as kind of a mainstream topic and word. I think one of the biggest surprises is for investors is how quickly that market matures and how important it is for all industries to incorporate some sort of AI or technology angle into their business processes to remain competitive. I think everyone thinks it's kind of this far off opportunity or market opportunity today, when in reality, you'll start to see businesses incorporating AI and machine learning very quickly into their business processes over the next couple of years.
David Chan, MLC, thank you for being part of the event.
No worries. Thanks again, James.